Hi, welcome to Wealthy Mindset. My name is Oliver. Thanks for watching. I really appreciate it. Hope you're having a great day. In today's video, I'm going to talk about BlackBerry stock starting from April 22nd trading day, covering the next week and a half-ish. I'm going to analyze the graph to give you the lows and highs, essentially price target predictions. Now, quick disclaimer before I begin. I'm not a financial advisor. I'm not a professional. And everything I do share with you is just my opinion. It is not advice. So please do not buy or sell based off the information I give you or the opinions I do form. Please do your own due diligence and research before buying and selling. I do own shares in BlackBerry, been holding for 6 years, so I'm a long-term investor overall. Okay, so now getting into the graph, we have a downward trend resistance line that I've shown in the past, acts as support, bounced off on January 25th, 2021, had touch points across here as well. But the main points I want to show, back tested as resistance as of mid-March right here, twice, and still keeping us down. Now, the unfortunate part is as of April 20th trading day, we basically broke. So there was an upward trend support level that I showed in the past. So I'm gonna show it actually right now. So we had an upward trend support level. The only thing is though, like I stated in the past 2 videos, I think I mentioned it, I would not put much faith into it just because it only had 2 touch points and it was around the 840, 850 range. Unfortunately, we did break through it. And that was only because, so I think personally, I don't know, this is not guaranteed though, because there was no real news to bring down BlackBerry, but the market went down, on April 20th trading day, and once we opened, we went down with the market as well. So that was the unfortunate part, broke levels, so on and so forth. Now there is a silver lining, and I'm gonna explain why. So we have an upward trend support level right here, and I would put more faith into this just because there's one touch point right here as of March 2020. There's like a parallel upward trend support, like touch points from July 2020 to August 2020. And then there's the third touch point as of December 2020. So nothing's guaranteed. Take everything with a grain of salt. We could break this, and I'll explain hypothetically what level would it take to break this, a little bit more detailed than what I'm going to explain right now. But if you think it's going to come back down, so the game plan is to come back down and bounce off to the upside, right? I don't know why sometimes the graph does that with like the squiggly lines, but either way. So if you could see this line right here, this is the graph line, goes up, comes down, goes sideways right now. If we were to dramatically drop right now, we would need to hit essentially $8 to bounce off it. Breaking $8 would break it, but from what I measured and zoomed in, even $7.99, $7.98, $7.97, and $7.96 is still fair game to hit those levels and bounce up to the upside. But it is a little bit dangerous if we hit those levels, and I'll explain why. So if I go to the 1-month chart, we have the downward trend resistance line like I explained. I'm going to elaborate more on that and this downward trend resistance line as well. But before I do, I just want to talk about, for example, April 20th trading day, market dropped, we dropped with it. And then the good thing is though, so the worrisome with the upward trend support line that I showed in the 5-year chart, because that was the 5-year chart, this is the 1-month chart. We had support $8.30, $8.20, $8.10 in terms of ranges. This is not like there's more, like for example, $8.36 and all that stuff, but I just didn't want to get into all the details. $8.06 was support. The main ballpark I didn't want to break was the $8 support level, just like the upward trend support level as well. But there's horizontal support within that range. The problem about breaking $8, even though we could still bounce up on, like for example, going down all the way to $7.96, is I've seen from the graph in the past where we would hit, like for example, $7.96 or $7.99 and bounce back up to the upside into like $8.50 range, and then the next few days come back down and break the $8 price point again, and then trickle down to like $7.70 support level. So because we didn't break the $8 price point, I'm pretty much more optimistic that we'll hold the $8 price point. But this is just my opinion, no guarantees, it's not advice, etc., etc. So I'm pretty optimistic that we'll stay above $8. Hopefully we do. Again, nobody knows for sure and it's not guaranteed, but I'm kind of optimistic. So the one other thing too, before I break down even more stuff, is in terms of the 5-year chart, the MACD line, yes, it's still in the negative, but I think after a certain amount of time, so like if you look at patterns and all stuff, this is a little bit of a stretch though, but in terms of how long it's a negative for, it could double dip even lower, but usually after a while it starts reducing the negatives and starts curving back up. So what I'm expecting is, by the way, MACD line is in terms of like moving average direction. So right now it is bearish, it's not optimistic, but I want it to cross over to the positive, so it could be bullish and optimistic. But I think it's going to start curving up, maybe not that dramatically, but somewhat curving up to the upside, so we might have a decent run. Again, this is the 5-year chart. If you go to the 1 month chart though, 1 month chart is in the positive. So in the month moving average in terms of direction, is it bearish, is it bullish? It is bullish right now at the moment, which is pretty awesome. So like always, I'm going to cover the upside and the downside. So if we go, because again, nobody knows for sure. Some great news could come out tomorrow and could skyrocket. Some horrible news could come out tomorrow. We can just drop like a rock tomorrow too. So there's that. Now, because like essentially I already covered the down range, so I'm going to cover the upside. So the down range is still possible, but before I get to the full upside, if we were to drop, we have support at the $8.50 range, essentially $8.51 to $8.56, and then $8.40 range, essentially $8.41, $8.40. Now, if we were to go to the upside, we're going to have issues with this downward trend resistance line as well that I'm going to elaborate on, the moving averages, and this downward trend resistance line as well that I mentioned. So I already mentioned this one where in the middle of March, it had 2 touch points right here. And then right about here, we have one that has 1 touch point on March 26th, 2nd touch point on April 28th, and then 3rd touch point April 14th, 2021, by the way, all of this. And then another touch point on March 24th as well. But this one's not necessarily, when I zoomed in, it's like not a clean touch point, but it's pretty close anyway. And then another somewhat touch point right here that's like on the line as of March 23rd. So we technically have 3 touch points. Well, we have 3 touch points for sure, but then we technically have 5. So this could keep us down too. Now, both these lines could keep us down until April 27th, but I'll elaborate more. So if we were to go to the upside, we need to basically pass the $8.69, $8.71 range for the most part, or not range, sorry about that, $8.69 to $8.71. Then once we pass that, we're gonna have quite a bit of issue. And by the way too, the $8.68, $8.67, the moving average right here will potentially knock us down. I think it probably already knocked us down. No, it didn't. But it looks like when we close, or the all-time high, kind of pretty much we stopped right about there. So I guess, I don't know. We might get knocked down though. So we'll see. Hopefully we don't. Hopefully we passed it. Because just quick thing, moving averages don't need to act as support or resistance. It's not like what I'm saying, it's not a guarantee, but there are times they could. So for example, right here, it passed by like nothing, right? But then there's times it will act as support. Like for example, right here, it bounced off as support twice, right? So there's that. So hopefully it just goes through it like nothing. This could act as a resistance, but I'll elaborate more. So hopefully we pass 867, but essentially want to pass 869 to 871 between that range. And then we need to pass $8.80. $8.80 is going to be pretty huge in my opinion. Quite a bit of horizontal resistance in that level. Essentially $8.88 between $8.82 to $8.84 and then $8.89. Then once we get to the $8.90 range, we're going to be met by this moving average anyway. So about $8.91. Depends on when we meet it though. Because if we meet it through the next trading days, they might go a little bit lower. If we're going lower, a little bit higher. So like it moves based on correlation of, like, again, it's the moving average line. So depending on how we average out. Now, once we pass 890 range, we'll not, like 891 is horizontal resistance too, as by the way, but we have the moving average that could knock us down at 891 as well. But then we have resistance between 895 to 897, and obviously naturally 899 itself, but either way, want to pass 890. Then $9. So now the issue is, if we were to go up to this downward trend resistance line right off the bat, we basically have resistance at $9.04, but I don't think that's necessarily going to happen. I think we're probably going to meet it a little bit later on. So it'll be like at $9 by the time we get to it. If you're optimistic though, that's pretty optimistic. Actually, no, maybe not too optimistic. It's mediocrely, because we're already at 866, so that's pretty good. Not too bad. But the problem is we do have quite a bit of resistance. So that's why it's still optimistic nonetheless. And it's going to upside. But either way, if you were to go up to it directly from here to here, it's $9, and hopefully don't get knocked down. So if you were to get knocked down, it would be like this, and then maybe even come back down to 840, 850, and then have probably somewhat of a cycle right here. Hopefully that doesn't happen, but that is potential, because you could almost see where it's just like knocked down from here, goes down here, gets knocked, goes up to resistance, gets knocked down, And then if it wasn't for the market, it probably would have continued a cycle. So maybe hypothetically, the high would be $9, maybe potentially, or it might curve up. So maybe the high would be $8.90. So just quick thing too, just because I'm thinking maybe this might be possible. So someone just like keep zigzagging up and then hitting the resistance line around 890 range, or maybe the high 880 range, and then end up coming back down to the 850 range, and then going back up and probably deciding on, as of April 27th, what to do, right? That is a possibility, but hopefully that's not the case. Hopefully it goes up to the $9 and passes it. Now the problem is we have horizontal resistance at $9 anyway, and then we have horizontal resistance between $9 and $9.13 / $9.14. Quite a bit of horizontal resistance at $9.19. You can see here with the dashed lines right now. So look at like horizontally, this dashed line. If I just hold it right here, it's like I remember when I measured, it was like $9.12 mainly, but you could already see, and there's like a bunch of price points like 9.13, 9.14, all that stuff, but kept down. Yes, there's false breakouts, but essentially just kept on coming back underneath. That's the unfortunate part. Now, once we pass that, we'll have resistance at $9.31, between $9.27 to $9.37, so $9.27 to $9.37, but the main ballpark will be between $9.27 to $9.31. And if we were to spike up dramatically to it, again, like I think I might have stated, but I'm not sure, $9.39 to get up to it dramatically. But the problem is, once we get to $9.39, $9.40, and we break up to the upside, it's not all good news, because we have a lot of resistance at the 950 range, and we could get knocked back down, because we might like, for example, spike up past 950 and hit 963, but then get knocked back down underneath the downward trend resistance line. So that's the problem. So, and then if we try to pass it, we might get knocked down again and just start trickling down until 9/27 or April 27th. So we'll see how it plays out. If you're optimistic, we're going to pass the $9.50 range and the 963 range as well. Then we're looking at the $9.88, $9 between 983 to 988, that horizontal resistance level. I think that would be good news, but the best, like from what I've seen, the strong horizontal resistance levels, obviously $10 is a strong horizontal resistance level, but there's a good chance that if we actually get to $10, I could see that actually being a good stabilization point, because the problem is the $9.88 to $9.83, that could stabilize around there, but I haven't seen like a good amount of solid evidence where it could stabilize fully there. And then even the 990 range, essentially 995 to 999, I've seen a good amount of consolidation where getting to $10, we could consolidate between the $10 range, $10.02, $10.05, and then between $10.11 to $10.15. So getting to $10 and not having a quick just spike up and coming back down, just staying there for at least a little bit while, would be pretty promising. Now, again, the MACD line is in the positive, so that's good. The only problem is we're below technically 2 moving averages, but we'll see how it goes. So I'm pretty optimistic overall, but again, nobody knows for sure. Okay, so that's it for the video. Thanks for watching. Really appreciate it. I hope you liked it, and if you did, consider dropping a like. It does help out the channel. Thank you so much for that. If you have any questions, do not hesitate to ask. I'll try to answer them as soon as possible. And if you like videos like this or other stock videos or other financial videos, consider subscribing so you'll be notified when I do upload those videos. Thanks again for watching. Appreciate it, and I'll see you in the next video. Peace.